Hello, in this presentation we will compare QuickBooks Online versus QuickBooks Desktop. Hello, in this presentation we're going to make a payment for our inventory purchase within QuickBooks Online. We will have a comprehensive QuickBooks Online course soon, if not available yet. We also have a comprehensive Excel course which complements the QuickBooks courses, and a QuickBooks Pro desktop version course you can find at the link below. Here we are in the QuickBooks Online dashboard. We will be continuing with the Get Great Guitars problem. We're going to basically just be issuing a check. However, this check will be for a purchase order that we had prior put in place for the purchase of inventory, in our case, guitars. It's important to know the flow here as we think through this, and it's a little bit different than we might think, depending on or based on our normal purchase type of activities. For example, if we were to purchase something from Amazon, I'm going to select the drop-down menu to demonstrate this. We're going to select the drop-down menu. We're considering the vendor section because we're making a purchase of inventory. Typically, we would pay for the inventory, meaning we'd actually have the credit card payment go through, and then the inventory would be shipped to us. In this case, when we buy a lot or in bulk, or if we have an agreement with a vendor and we are purchasing, oftentimes we don't make the payment up front. We give a purchase order. So we're saying that a purchase order happened, we have a purchase order, we then are receiving the inventory at a later time, and at that point in time we're getting the bill and we're going to issue the check at that point in time, as we can check the inventory and match it to our purchase order that was created. So it may be a little bit different. This purchase order may be a little bit different than we typically think, and there's actually no financial transaction. When we create the purchase order, we're just basically saying, hey, it would be like us looking on something on Amazon and saying, I want that thing, and just telling Amazon, hey, I'd like that thing, and not actually paying them until they deliver it. Once we receive it, then we're going to either enter the bill and or make the payment at the point in time of receipt. So we, the purchaser, therefore have more kind of control in that case. We're not going to make the payment till we verify that we've gotten the product. And so that's what's happening here. We ordered guitars in the past, we've received them now, and we're actually just going to write the check. We're going to say, hey, there's a bill within the inventory that we have received, and we are writing the check for it, and we're going to populate that check in part with what we've created in the purchase order. We'll be able to link those two things. So we're going to select the check here, and we'll just be writing a check. The check number will automatically generate. That's going to be good whether we print the check from QuickBooks or if we're doing the checks in some other system. We should be matching that out and making sure that they tie out. Then we're going to select the Choose Payee, and we're going to select, in our case, Epiphone. We're paying for guitars that we purchased. Our vendor is Epiphone. So here's our drop down, here's our payees, here's our vendors. I'm going to then type in Epiphone, and there we go. So that's the one. Now when we do that, we see this pop up here. We have this adding. This is our purchase order for the 400 that we requested, and this is what we have. So we can populate this whole check through this matching of the purchase order to the check and link it. So this is going to be a great feature to have. We're going to say add that. And let's go through and see what happened here. If we scroll down, we see the accounts here. We can put in the accounts typically that we would be recording to. So if we paid the utility bill or something like that, be utilities expense, telephone expense, whatever the payment was for would be going here. Items, however, are going to be down here. These are the inventory items. So remember, we want to keep that separate. Whether we're writing for an expense or an asset, like I purchased equipment or I paid for normal business expenses, those would be up here. If we have an inventory item, such as a guitar in our case, that we are buying and then selling, those will be populated down here in the items section. Populated for us automatically. It pulled over the item number or short form, the product or service, the description. It's a Epiphone Les Paul, quantity 1, $400 price. That's being pulled over from the fact that we have this on the item list. And we even have the customer here who we purchased it for, which is Eric Music. Remember that this customer field will not always populate. It's going to populate if we chose the customer within the invoice that we made, depending on if we bought this guitar in particular for this particular customer, Eric Music. So we're going to scroll back up and check everything else off. The other side, it's Epiphone. It's obviously going to be the checking account that we're writing the check for. The mailing address, we're going to keep it here. We're not going to have a mailing address, and so it would be good to include that, but it's not required to process the check. We're going to say the date is 01/25/21, January 25th, 2021. Check number should auto-populate and should be good after the first check we write. We could select if we're going to print it or not. If you are to print these, then you're going to want to have the printed checks or they're still pre-formatted checks with the check number on it. You'll have to make sure that you put it in the printer in the correct way and then print these out, and you can print them straight out from the system, but you still have to buy the checks in order to do that. And then we're going to have the rest of the information will just be down here. Here's the item, kind of like the expense account. What does this item mean? It means we're going to be decreasing the account or increasing the account of inventory. This is an inventory item. So the journal entry related to this check then is going to be, by the fact that it's a check, decreasing the checking account, and the other side of it will be increasing the asset account, the inventory, which we will then expense at a future time in the form of cost of goods sold once we sell the inventory. So we're going to go ahead and save this and then check out the financial statements and see what happens. So we're going to say save and new, the green button on the bottom. And it's actually telling me that the check number already exists. So I'm going to say, do you want to save anyway? I'm going to say no, and I'm going to adjust this. Usually that auto-populates, but for some reason the check numbers are not populating in order. I'm going to put check 2004. This is probably because I'm going a little bit out of order as we go through this problem. We're bouncing around in time a bit. So I'm going to change the check number to 1004, the check number we are on. If you had to check that, you'd have to go to the check register and see which check number you're on. Obviously, if you were printing checks, you would have the checks there, and you can check the checks that you're writing on. Just make sure that you're not skipping checks. That's the point of the process. So you want to make sure that if there's a check that's been skipped within the check number, then that could be a problem. So we're going to keep that. We're going to say save and new. And there we have this, and we're going to close this back out. And then let's take a look at our reports. We're going to go to the reports left-hand side. We are going to run first the balance sheet, or only the balance sheet, it's all we're going to run. And then we're going to check the balance sheet. That's what we will be running. The dates then are going to be 01/01/212, 01/31/21, and that's January 1st, 2021. To January 31st, 2021, and then we're going to run that report. So here is the report. The checking account should be going down by $400 for that check that we wrote. We will select that checking account and see if that is indeed the case. Here it is, check number 1004, Epiphone inventory. Let's check on that and see if it is what we think it should be. So there's Epiphone, there's the payment date, the check number. Scrolling down, this is the check we have. I'm going to close that out. We're going to look at the other side. We're going to close it. I'm going to go back to the report. We're going to go back to report summary. And we're going to scroll down to the inventory assets. Here's the inventory asset. And this should be going up. If we scroll to the right, we see the 400 there, increasing that amount. And clicking on that, there is our check. I'm going to close this back out. Now we did purchase inventory. It's increasing inventory here. It might be worth taking a look at the inventory report and see the detail there. In order to do that, we can go to the reports on the left-hand side. We want to see the inventory. And I'm going to do the inventory valuation detail. So we'll select the inventory valuation detail. Going to change the dates once again from 01/01/21 to 01/31/21 and run that report. So once again, January 1st, 2021, January 31st, 2021. And then we could see our detail that we have here. So it's listed out. These are our types here. So we have an ELP. That's an Epiphone Les Paul for us. We have the other types of guitars dropped down by the type. And then we have, of course, this 1004. There's the check that we just wrote for a new Epiphone Les Paul. Here's the Epiphone quantity 1, 400. We currently have 2 of them. on hand, and that's $800 total. Now note that the amount that we pay could change because the vendors we buy them from could increase or decrease the price. And the online we use here, the first in first out method is what the online version is going to use, as opposed to the on ground version, which is going to be using the average method. So for this particular guitar, if it just went up or down in price and we had two of them, then we would take the first in first out, and when we sell it, we would assume we sold the first one we bought, just as an assumption. So that's how, as opposed to averaging the prices together and taking an average price. So that's the difference between the on-ground and the online version. Within here, we're going to purchase within each of these pretty much the same purchase price, which, depending on your industry, may be the case for much of the transactions. So that's how the inventory will be working and that is going to be the purchase of inventory. Hello, in this presentation, we're going to record an inventory payment by check and tying that out to the related purchase order within QuickBooks Online. We will have a comprehensive QuickBooks Online course soon, if not available yet. We also have a comprehensive Excel course which complements the QuickBooks courses, and a QuickBooks Pro desktop version course you can find at the link below. Here we are on the QuickBooks Online dashboard. We will be continuing with the Get Great Guitar problem. We're going to be basically just writing a check for inventory that we had received in the past, but the tricky thing about the check is that we are tying that out and tracking them to the purchase order we had made in the past. Let's take a look at what is going on. To do that, to tell the story, we're going to select this plus icon up top. We're going to go and just look at the vendors section and see what is going on here. What's happening is we already issued a purchase order. Purchase order happened in the past, meaning we asked for a guitar to be given to us. It's a little bit different than if we were to purchase something from Amazon as an individual, where we make the payment at the time that we decide we want to buy something, and then we get it delivered at a later time. In this case, what we're saying is the purchase order has no actual transaction. That's what we have entered in the past. Just a request, just a piece of paper, no financial statement being affected when it is corrected in terms of numbers, asking for a guitar, in this case, that being the inventory that we are purchasing. And therefore, it's just a request form in essence. We're not going to record the inventory until we receive it, and we're not even going to record the bill because we haven't yet received the inventory. We don't owe anything at this point in time. And of course, we haven't yet made a payment either, which is a bit unusual thing in terms of the comparison between purchasing within a business and purchasing if we're just an individual. That's the thing that could be different, meaning there's a little bit more power, or could be a little bit more power on the purchasing side of things to be able to first get the inventory, check it, verify it, and then enter the bill and make the payment upon receipt. So therefore, we're saying that we have already had this purchase order. We're going to write a check now, and we're going to tie that check out to the purchase order, be able to populate the check through the purchase order we had created in the past. To do that, we're going to say check, we're going to write a check, and we're going to enter the information for the check. Of course, the check means that we're going to be decreasing cash or the checking account. We're going to choose the payee, and we select the drop down. We typically have the vendors on top. That's where we're guessing would be the normal payees. We're going to say Gibson, so I'm going to type in Gibson as the payee. Tabbing through this, it's the checking account, and we're not going to have a mailing address. We're just going to keep it as Gibson. The date, of course, if it was today, we would have today's date, but we're going to be doing this as of 01/25/21 because we're working in the future for this problem. And the check number should populate automatically. We have and we want to match that. Remember, you do want to match that. We want to match that to, for writing checks, it should match out with the automatic number, the pre-numbered checks that we're writing. Then if we're going to print them, we would select this print item. And if you print checks, remember, you just can't print checks. We can't print checks just from the QuickBooks system. We have to buy the checks. They'll be pre-printed. They'll already have the number on it, and they won't have then some of the other information like the amount and the person we're paying and whatnot. That's what will be printed on them, and that's going to help be a check against people stealing our checks and whatnot, and making sure that we can track our cash. So note, when we entered Gibson over here, this purchase order item popped up. And this is going to tell us, hey, there's a purchase order right here for this this vendor. Do you want to populate this with this purchase order? Should we link these two things? We're going to say, yeah, add that in. And if we scroll down, we see it doesn't populate anything here, so you might get a little worried there, but if you scroll down, it's in the item detail over here. So this is a bit different than the on-ground version where they had 2 tabs. And it's a little bit easier to see in some ways because you can if you can miss the tabs sometimes. So now they're listing the items here. This is where we would put normally the expenses if we're paying for the utility bill, the phone bill, or any other type of normal expense, or if we're purchasing anything that would be an asset like supplies possibly or equipment of some kind. That would go up here, or even if we're paying off a loan payment, anything other than an inventory item. In this case, we have the inventory items. So we can list out the inventory items, important because we have to track the inventory items, and therefore we can't just say it's the inventory account. We need to put it into the subcategory and describe which inventory we are purchasing. In this case, a GSB, which is a Gibson SB guitar, that's what we bought. This is populated directly from the purchase order right here. So we don't have to enter it, it's just going to link it. It's showing that through the little link here, saying that this is linked to the purchase order. So if we think about what this is going to do, and then we record it and verify that it does indeed do what we think it's going to do, as I think we should be doing every time we enter just about anything into QuickBooks. This is a check. So what's it going to do? Well, it's going to decrease cash. It's going to decrease the checking account, clearly. The other side is going to be what? This account? That's not even an account. It's an item. And it's an inventory item. Therefore, we're buying inventory. And so the other side is really inventory. This is really an inventory type account. Inventory item is going to increase inventory by the amount of that $598. Let's save it and see if that is indeed what happens. So we're going to go to Save and New. And it's saved. It looks good. No red message. So that's nice. Now I'm going to close this out with the X up top. And then we're going to go to the reports, left-hand side, and verify that it does what we think it should have done. Reports is going to be the balance sheet. We're going to look through the balance sheet. That's it. And we're going to change the dates to the dates that we are working on. 01/01/21 to 01/31/21, January 1st, 2021 to January 31st, 2021. We're then going to run that report and we'll go through this and check it out. So here we have the checking account. We'll select the checking account and see if this check is in the checking account. There it is. There's the $598. If we select that, then we will see the check that we just created. Closing that back out with the X up top. And going back to the main report with the back to report up top here, we'll then choose the other side, which remember was a service item or an item, an inventory item, which is inventory. So inventory should be the other side going up. Here's the inventory. If we select that, then we should see it going up as well from this check. Here's the check. Here's the $598. If we select that, then we should see again the check 1005 and the $598 down at the bottom. Let's close this back out and let's look at one other area where this should be at, and that should be the inventory listing out. So we're going to go over to reports on the left hand side and check out an inventory report. So let's go to reports. Let's type in inventory. So we want inventory, and we would like an inventory detail report. So we want an inventory detail. We're going to then change the dates to 01/01/21 to 01/31/21 and run that report. So we're going to run that report. And here is the information. Now we just purchased a, what did we purchase? A GSB. So if we scroll down, we see the GSB here. There's the check that we wrote. There is the amount. And so we have one of those in our inventory items right here. Hello, in this presentation we will record the payment for inventory within QuickBooks Pro 2018, the scenario being that we have issued a purchase order, we're receiving the inventory and Hello, in this presentation we will record the payment for inventory within QuickBooks Pro 2018, the scenario being that we had a purchase order, we purchased inventory, sent a purchase order, and now are making a payment for the inventory that has then been received. If you've been working with us, we will be continuing on the problem of get great guitars. If you have not been working with us, that's okay. We are going to be working here in terms of writing a check for inventory that has been ordered and received, has been ordered with a purchase order, and now we are receiving the inventory and making a payment for the inventory at this point in time. If you have a backup file and would like to restore that backup file to this point in time for this particular problem to put us all in the same point, then you can go to the file and open or restore company. It is useful to do that so that we have the data. We will be entering data as we go. We've entered data in the past. We will continue to do so. If you don't have that information, that's okay. You can kind of follow along here, but if you have that information and you, even if you made an error in the past or something like that and want to be in this exact location, you can use that backup if you have that available. The scenario here being that we had a purchase order. We're first going to write a check to Epiphone. That's one of the people that we buy guitars from, so we're buying and selling guitars here. And we had a purchase order. If we click here on the purchase order, we can scroll back to the prior purchase orders. These are the purchase orders open. We had one from Gibson. We've got one to Epiphone here. This is the item that we're going to pay out. Now, we could do this a couple different ways. If we had a large purchase order and we were going to receive the purchase order, typically this is a request, remember, when we make the purchase order. And that's basically saying, hey, we would like to purchase something. Unlike if we purchase something from Amazon, the purchase order typically happens before payment happens. So we're making a purchase order before we've even made a payment on it, no transaction happening at that point in time. Then in the future, we're going to receive the inventory. So we could go down this track here and say, we have now received inventory. And if we select, I'm going to close that back out. And note, of course, we are on the Home tab. And to get to the Home tab, you go to Company, Home. And if you want to see the open windows, you want to go to View, Open Windows List. That's where we're going to be working on these open windows as we move forward. The Home tab gets a great little pictorial format of what we are doing through the process. So a typical purchase order inventory process would be that we make the purchase order, we're going to receive the inventory. If we select the drop down, trying to get the drop down, it's going to say receive inventory with a bill, and that will often be the case. We'll have the inventory with a bill or receive inventory without the bill. Then we can select that, and then we can have enter bill against the inventory. And then we have the pay bill, which would finally mean we're actually going to write the check. Now this is going to be a great process, especially if we have to count the inventory. So if we ordered a lot of guitars and we're trying to get the guitars and count them and see if they are all there, we'd want to do this. Or if we had coffee cups or something like that, we'd want to make sure that that's the case. If we want to get right to the writing of the checks and tie basically the purchase order to the check writing, we could go directly to the writing of the check. And note what will happen is what's gonna happen is it's gonna tie out the check once we put the vendor in there to the relevant purchase order that we have out there. So what we're gonna do is we're gonna write a check. That check is gonna be to Epiphone for a guitar that we had purchased we ordered. We had not yet purchased it using a purchase order. And as we do that, the system's going to ask us, do you want us to link this guitar, this payment that you're making for this guitar to the purchase order? And we're going to say yes. And that will then populate the information for us. So we're basically linking the purchase order to the payment. We only bought basically one guitar, so it's going to be a pretty quick way to record this information for a business such as this, a small business purchasing the guitar. So we're going to say, write a check. We're just going to write the check rather than going to the check register. In order to write this, we're going to write it directly here. Whether we are actually have a manual check or whether we are printing this within QuickBooks, we're going to go into the write checks feature. We're just going to tap through this. It's going to the checking account. That's probably our only account, or in our case, it's our only account, but it should default to the main checking account. The check number should also default, so that should match the check numbers, whether that be in an external checkbook that we are writing or within the printed checks or the external checks that we will be using to print these out. If we're using QuickBooks to print our checks, note that QuickBooks will not just print the check from scratch on a blank piece of paper. you will have pre-printed checks. The main reason for that is the fact that this check number then should match the number on the pre-printed checks, and that's going to be an internal control that's really, really valuable. So it's basically forced on any software that you have to have that that internal control there, so you're not just kind of printing the check. So that's what we're going to have. We're going to say tab, and I'm going to increase this to January 25th. I'm going to do that, and notice we're always working in 2021. We're going to do that. I'm just going to do that with the plus button. So we're on the 17th, 18, 19, 20, 21, 2, 3, 4, 5. And there we have that. Main thing, the main new thing is the Epiphone. That's who we are buying the guitar from. So we got the bill, we're going to pay for it now. So if we select the drop down, we could find it there. If we type it in there, we start typing, it will then auto-populate, and then that's the one we want. So if you just find it, if it's already selected, then we can select tab, Epiphone, and we can select tab, and then this will pop up. Open purchase orders exist for this vendor. Do you want to receive against one or more of these orders? And we're going to say, of course, yes here. Now, if this does not pop up, then it means that you probably don't have an open purchase order, and if you thought you did, then you probably want to go back and take a look and see what happened. If we're purchasing this directly, say, from our vendor, such as like if we were purchasing from Amazon or something like that, then we may not have a purchase order, because in that type of situation, we would probably be making the payment before we receive the inventory. But if we're in the case where we're receiving the inventory before payment, a case typical to many merchandising companies, then we're going to have a purchase order, and then we could tie out the check and or go through the billing process and the check to the purchase order. So we're going to say yes. Once this pops up, we're going to say yes, and it's going to say this is the one here. This is the purchase order 1001, which is outstanding for this Epiphone. Is that the one you want? We're going to check it. We're going to say that is the one we want and say OK. And there we have that. It then populates everything related to it. Let's go through and see what it populated. If we were purchasing this by check without this populated items, we'd have to know some of these distinctions. One, obviously it's going to populate how much it costs. It already knows that because we made that through the item list. So remember that we have an item list over here. If we go to list and we go to item list, we had set up this particular Epiphone. This item list here was set up for the Epiphone that we purchased, and I'm not sure which one we purchased, so let's go back to home. I'm going to double click on the purchase order and scroll back. So there's the one. It's an ELP Epiphone 400. That information right there was generated from the item list that we created, and it's the ELP. Note it says 500. That's the price, not the cost that we're buying it for. If we want to know where that data came from, we have to go to items and then edit, and we see that the cost was 400. That's how much we're purchasing it for. So we already have that in the system. When we ordered it, we already said in the purchase order, hey, this is, what we believe the order price will be. It should match up. So we're going to close that out. That's one of our internal controls as well, that the price that we believe it should be matches up. I'm going to close the purchase order. The only two items I have open now are the home and the write checks. Going to go back to write checks. So there's the 400. Then it's going to have the address or the person we're paying. Hopefully it would have the address. If we had the address for the vendor, it's not required in order to write the check clearly. And then we're going to have down here a memo if we wanted to put the memo. I'm not going to put a memo. We probably should, but I'm not going to put a memo. And then we have the item. This is the important piece. This is where we really need to understand what's going on here. Whether we purchase this item from a purchase order as we did here, tying it together, or whether we're purchasing it directly with a check, possibly paying for it before we get it if we're a small business. We do need to note that the items is different than the expenses. There's these two tabs. It defaulted to the items tab when we selected the item. But what's the difference between this tab and the expense tab? This often will be the default. So when we write checks, it'll often default here, or it will default to the last place we were at, which is usually an expense tab. Normally when we write a check, it's an expense. We pay the bills at the end of the time period, utility bill, possibly wages expense. We pay, the rent bill. Those are all types of expenses. So typically the default will be to an expense. There's typically more expenses than any other account. Typically when we write a check, we're writing it to an expense. But in this case, we're writing it to purchase an asset, that asset being inventory. Inventory is being driven by these lists over here and these items. And so we call these item lists here items. So we're buying an inventory item. And that is why we have to put it over here into items. So when you see items, they could have called it inventory items. Might have been a little bit easier for us to know. But they just called it items. We need to know that that means inventory items. And that'll give us the detail down here. Also note that everything else is recorded as an expense. You might think of some other things that you might purchase that are not expenses, meaning we might have bought furniture and fixture here, which would mean that we would record the asset up here of furniture and fixture. But that's still here. That's still in the expense tab. So this name is not as specific as it could be. What it's really saying here is this is all the items, basically inventory items, and expenses covers everything else. Typically those are expenses, but we could have purchased other things with this other assets such as property, plant, and equipment or supplies. So in this case, note that we are on the expenses, which will be there automatically if we tie it out to the purchase order. And it gives us that information drawing directly from the purchase order. It gives us the item, the description, the quantity directly from the purchase order, the cost from the purchase order. And note we have a customer here too. That customer that we had from the purchase order being Eric Music. That's who we bought this guitar for. We bought it from Epiphone thinking that it's going to go to Eric. Eric probably already having told us that that's the particular item they want. So he came to us, said this is what we want. We went then ordered it from our vendor for that particular client. And then here's the purchase order number. Once we have this information, we have the option then of either printing the check or not printing the check. We unchecked the printing check option, so we're not going to print it. We could print it here or we can print it here. Note that if you do print the checks from QuickBooks, then you will need those pre-printed checks. So you'd have to order the pre-printed checks that would have to have your banking information on it and that pre-printed number on it. And then you'd put those into the printer and print it out. If, on the other hand, you're just using QuickBooks to track the fact that the payment has been made, and you're putting this information basically into the register to track that information and then to reconcile the bank account, you'd still need this information. That's how we're going to do it here because we're not printing out the checks. So we're going to uncheck the print later option, and that's what we will have then here. Going to go ahead and say save and close. Now let's go through and see what happened. Couple things. We could check this out a couple different ways. We know that this purchase order one of the purchase orders have been received now. So we could click on the purchase order and then go back to that purchase order and say, there's the one, the payment is received. So we actually, by writing the check and connecting them, are connecting the purchase order now showing that that purchase order has been received. And remember that this purchase order has no journal entry involved. But it is nice to track, obviously, the purchase order having been received or not. So then we're going to close this out. Then the other thing that's going to happen is going to be on the financial statements. We wrote a check. So we think that the checking account should then go down for the amount of check we wrote. And we should have gotten the inventory for the inventory that has yet then been received. Let's see if that's the case. Go into our reports. Scrolling down to company and financial. Both of those are assets. All assets are on the balance sheet. So we'll look at the balance sheet standard. Changing the date to the date that this current problem will be worked in, 12/31/21. Then we're going to change the date range so that when we drill down or zoom in, it will then have the date range, basically a transaction report or basically a general ledger. 01/01/21, date range beginning January 1st, 2021 to 12/31/21, and OK. Then we're going to double click on the cash. We would assume that the cash is going to go down. If we do that, we see it does. There's the 400 right there that we're being paid. We see the check is the thing that's happening here, the form, and the date, and then the check number, the vendor's name, and the split account. Where else is it going? Inventory asset, That is what we would expect. If we double click on that, zooming in, we see that we then have our check. So that looks appropriate. So we're going to close that, close that. We're going to then go to the inventory account. Here's the inventory account, and see if that has increased by the inventory we have purchased. Clicking here, we see that the check here has been entered for the Epiphone checking account. We have the 400, and so there is that item there. So that that has increased. If we double click on it, there's the check. Exiting out of that, closing that out. We also note that this should affect our inventory reports. So if we were to go to reports up top, and we were to go to our inventory and take a look at the valuation, how about the inventory valuation detail, inventory stock by item, or inventory stock by vendor? Let's look at the inventory valuation detail. And we're going to change the dates from 01/01/21 to 12/31/21. And then we can see that we just purchased an Epiphone. I believe it was this 400 right here, the Epiphone music. And that item on the 25th, there's our check number. So there's the detail of the activity. Double clicking on it, there's our check again. So once again, we can kind of find what's happened. It's useful to go back and forth to the forms and see what's happening when we do these items, when we record these items. Back to the home tab here. Next, we're going to do the same thing. We're going to do this for another. We received a guitar, and we're going to make the payment for that. And so if we take a look at the purchase order, we are going to link up, checking on or clicking on purchase order. Going back, we see it's going to be this item here, the Gibson. We're going to say we received that, and we're going to write the check for that, and we're going to tie that together in basically the fastest way we can, which is basically just writing the check for the inventory, and then it's going to basically check off or tie out to the purchase order. So once again, you could do that through the process, and we could also do that by going to receive inventory with the bill, and then basically put in the vendor, which was Gibson, and go through this process. It's going to say that there's certain open orders here, and we'd say yes, and then click on that order and do this same process through this format. And then of course I'm going to say no, don't do that. We're not going to do this, by the way. Don't do this. And say no, and that would enter the bill, and then we would basically pay off the bill, writing a check at that point. That's a great way to do it. You can have to go through the process here. We're going to basically bypass that by just writing the check here, and that's going to tie directly to the purchase order and record the inventory all at that one point. So we're going to go ahead and do that. We're going to say write check, and we're going to say it's going to be going from the checking account, and the check number should populate automatically. The check date, January 25th, 2021. We will be working in 2021. We will keep that date. We're going to type in Gibson, and again, we could find that, of course, by clicking here and finding who we paid. But we're going to type in Gibson and populate, and then select tab. It's going to say, once we select tab, open purchase orders exist for this vendor. Do you want it to receive against one or more of these orders? Yes, we do. And so we're going to say yes. It's going to populate the purchase order, and we believe that's the one, so we're going to check on that and say okay. Once we do that, then it populates the amount based on the purchase order that we had generated. That should match how much is owed from the bill. If it doesn't, then we're going to have to check that out and see what happened. Then we're going to go down, and we could have the memo. We're going to say we have an item, once again populated for us by the fact that we tied out the purchase order. It should tie out to what we have then received. Note that once again, we're not on the expenses tab. We're receiving an item. That item basically meaning it's an inventory item. Those items being generated from the items lists here, and it would have been generated and has been generated, and we had generated it in a prior presentation before we made the purchase order. And that's going to populate then this information in accordance with the purchase order, which should tie out to what we have received. And if it does, then we're going to say that that is okay, and save and close this. Once again, if we were to go to the purchase order then this way, we can just click on the purchase order and just go back. We would see that we had received in full, so that's good. That seems like it tied out. And we close this, and then we're going to go to the reports once again, the balance sheet. We're going to believe that we wrote a check, so the check here should have been written. So if we double click on that, the check has been written. There it is. If we double click on that, there's our check. If we close that out, close this out, go back to the inventory asset. If we double click on the inventory asset, we see this last piece here once again. Double clicking on that, asset inventory is going up by this check that we wrote for the inventory asset. Closing this. So there are those two items. Once again, if we went to the inventory report, I won't go back there again, but we could go to the inventory report and see it's there. Note also, it's often useful to check the checking account with our register. A lot of people are used to seeing the register. So if we were to go to the banking and then register, the default will be our checking account. If we open that, then we should see this check then that we wrote here. Remember, in prior presentations, we wrote some checks and some deposits within this form, within the check register. It's possible to do that, but in order to connect it up to the purchase order, typically you'd want to write the check or enter the bill, and then use the check writing from the home tab to make sure that you're tying the thing out. If you're using something to write a check just to enter the data within the check register, a check that's already been written, and you just want to enter the data pretty quickly, then the check register could be a good way to do that. If you're trying to tie the information out or print all the checks, then oftentimes using the billing process or the entering checks is a useful tool to have. But in any case, we can see this information here. We can see the payments happening. If we want to see the actual check, the form of the check, you click on this item, and that will take you to the form that QuickBooks generates, whether we do it in the register or not, whenever we write a check or decrease basically the checking account balance. So we're going to close that out, and that's going to be it.